Hello, welcome to the European Open briefing for Tuesday, August 29th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we have quite a bit of risk off in financial markets this morning. This follows a fresh missile strike by North Korea, which flew over Japanese territory, raising tensions in the region once again. We're seeing surge in demand for safe havens such as gold, Swiss franc, and of course the Japanese yen. The dollar has dropped to a 4-month low against the yen, while the euro has broken above the key 1.20 level on the back of the dollar weakness and, of course, the absence of any comments by Mario Draghi over the weekend at the Jackson Hole conference. Sterling isn't doing too badly either, as the third round of Brexit negotiations get underway, although the main reason for sterling's current bout of strength is, of course, dollar weakness rather than any confidence in the Brexit negotiations. And in commodities, oil has rebounded somewhat from 5-week lows. Those lows came on the back of the tropical storm hitting Texas, which has led to a number of refineries being shut. Let's have a closer look now at gold prices. We can see gold has surged to 9.5 months high, $1,322 an ounce, although it has actually touched fresh highs a short while ago. This comes after North Korea fired a ballistic missile over northern parts of Japan before falling into the Pacific Ocean. The missile test wasn't totally unexpected, given that the US and South Korea are currently undergoing a military drill there, and it also follows fresh UN sanctions on North Korea. So some response by North Korea was expected, but this has definitely raised the stakes in the region. We're seeing both the yen and Swiss franc up sharply this morning. The yen is up at 4 months high versus dollar, and Swiss franc at a 1 month high, and it's also weighing on the US Treasury yields. 10-year note yields are currently at a 2-month low of 2.112%, although yields are also being weighed by, of course, Fed policy, given the absence of any comments on monetary policy outlook by Janet Yellen at the Jackson Hole symposium. Although we knew that Janet Yellen wasn't going to make a major speech there, there was some hopes that she might make some hawkish remarks about either inflation or the US economy, and the absence of this has led to a fresh sell-off in the greenback, boosting other currencies, particularly the euro. The dollar yen hit a 4-month low. We can see here that big spike downwards on the back of the North Korea missile launch. The dollar index, on the other hand, is at its low since January 2015, hitting 91.85. So a number of things weighing on the dollar: North Korea, Fed, and now, of course, Tropical Storm Harvey, as it could cause some economic damage. But the focus later this week should shift to key US data. We've got the Conference Board's Consumer Confidence Index released later today. Tomorrow we're going to see the second estimate of Q2 GDP numbers. And on Thursday we're going to have the personal consumption and personal spending, as well as the PCE price index, followed by, of course, the non-farm payrolls report for August on Friday. Let's see what the euro is doing now, because the current dollar weakness has added to the euro's upside momentum, and that momentum was given a major boost on Friday after Mario Draghi, speaking at the Jackson Hole, didn't really say much to talk down the euro, because if you remember, at the ECB's July meeting minutes, a number of policymakers had expressed concern about the euro's rapid rise rise, and the fact that Draghi didn't really say much on Friday led analysts to think that the ECB isn't really too bothered about the exchange rate after all. So that's why we're seeing a fresh rally in euro dollar. Currently, it's still not January 2015 levels, but it has broken above that key 1.20 level. And versus the pound, the euro is actually nearing 11-month highs, hitting 92.88 earlier today. The pound, although it's struggling against the euro, it's not doing too badly against the dollar. It's at a 2-week high of 1.2962. We've got the third round of UK-EU Brexit negotiations underway at the moment. We're going to get a press conference on Thursday where we should hopefully hear on what items they've agreed on. But overall, there is quite a bit of gloom surrounding these talks because the EU chief negotiator, Michel Barnier, has warned that the UK must start negotiating seriously, criticizing the British side for ambiguity. And these comments come despite a number of Brexit position papers being published by the UK over the past 2 to 3 weeks. The UK, on the other hand, is urging the EU to show more flexibility in its talks because it wants to prioritize the trade aspect of the negotiations, but Brussels insists that they must first settle the divorce bill, which is proving a major sticking point for the two sides. Let's look at oil prices now because WTI crude has been hit by the tropical storm hitting Texas. A number of refineries have been shut down in the region, meaning that this would potentially reduce demand for oil, since if the refineries aren't open to process the oil, then that would mean less demand. However, the fact that the refineries are shut, it does mean there's less gasoline going around, so gasoline prices have jumped 7%, resulting because of the resulted fuel shortages. On the other hand, Brent crude isn't too dramatically affected by the storm. You can see in purple, Brent crude has been holding fairly steady over the past couple of days, whereas WTI crude has plummeted due to possible impact of the storm. Looking at today's economic calendar, we did have a number of Japanese data released earlier today. Household spending in Japan disappointed in July, coming in at minus 0.2% versus forecasts of plus 0.7%. Although on the positive side, the unemployment rate was steady at more than 43-year low of 2.8%, and the job applicants ratio was also near record highs at 1.52. It is hoped that the tighter labor market in Japan will eventually lead to higher wage growth, leading to higher consumption and higher inflation, but for now it seems to be a rather slow progress there. We did have UK nationwide house prices released as well, and French GDP was confirmed at 0.5%. The main focus later in the US session is going to be the consumer confidence index. That's it from me. Thank you very much for watching and have a great day.